Hey everybody, it's Max Folkers, owner of RE/MAX Pacific here in finally sunny San Diego. Welcome as always to our video blog. I appreciate you tuning in. Today I want to catch you up on what's happened in the first 6 months of 2023 and what to expect in the next 6 months. Before I do, just a quick reminder, we obviously love to be a resource for all things real estate related. Many ways to reach out to us, but we'd love it if you just stop on by. It's great to see everybody in person. So let's talk about the market. So top couple of headlines are inventory and interest rates right now. I'm going to show you a couple of charts here. This first one is about inventory. This is a Redfin chart going from 2012 that shows that we are at the lowest number of active listings of all time. Now I checked this against San Diego. San Diego is within a few hundred of our all-time low and about a fifth to a quarter of what we historically are at this time of year. So what's driving all this? Well, that's all about the second headline, which is interest rates. Now, if you were to get a new mortgage right now, you'd probably be looking at about a 6.5% to 7% interest rate for a 30-year fixed mortgage. What this chart is showing is that nearly 92% of people who have a mortgage right now have a rate below 6%, and 62% have a rate below 4%. So that's really what's locking up our inventory right now. If you want to sell, you wanted to move up, or let's say even move down, it's going to cost you more than it would just staying put. So that's causing a lot of people to just stay where they're at and postpone all those movement plans. The people I see moving are either there's a death in the family, so the home is being sold by the beneficiaries, or you're very equity heavy and you are moving to another area where you don't have to get a big mortgage, or you're moving out of California altogether and paying cash for a house. So what is the ultimate effect of all that? It is that the number of homes sold, number of closed transactions in May was down about 26%. 26% year over year, that's a big impact. And so not only does it affect the agents, 26% fewer deals, 26 fewer escrows, titles, home warranties, inspections, and then what else happens when you buy a house? Well, a lot of people want to do home improvements. So I thought this was really interesting. Home Depot is getting hit. See their first ever decline in sales in over a decade. Now that's going to continue to have ripple effects. Think your contractors, appliances, boom, 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 all those suppliers. It's gonna trend out. So what's that mean for prices? All right, well, let's get to prices. That's what everybody cares about, right? What is happening with my prices? So we are down 3.5% year over year, but keep in mind last May was probably the end of the last semi-good interest rates. So what I expect that we're going to see going forward is that June will come out, will be somewhat flat, and then we're going to see these year over year numbers really spike because the rates were so bad last year and now people are kind of getting used to them. Transactions are going to be way down, but those data points and that lack of inventory is going to drive prices up. So that's what I see. I think in 6 months from now, prices are going to be higher than they are right now. If rates dip, that's going to drive even more demand and hopefully unlock some of the inventory. But that's what we've got. If you got any questions, certainly reach out. I appreciate you tuning in as always. Thanks so much. It's Max Folkers again with RE/MAX Pacific.